If you're looking to expand your business, there are a couple of tax topics that you need to keep in mind. And in this episode of the show, I'm going to dive into what those are. Now, I'm Terrell Turner, the host of the Business Talk Library Show and the Finance and Accounting Show. Well, usually I'm accompanied by my amazing, beautiful wife, but today I am flying solo. And because you guys liked another episode we did where we actually went back into the Business Talk Library and we pulled out some of the great content that we've created over the years that have really touched on some very important topics that have helped a lot of business owners. And one of those areas is going to be on taxation related to growing companies. I mean, in this world we live in right now, there are a lot of companies that are trying different strategies. And what they don't realize is, as you're trying different strategies as it relates to how you sell your product, or as it relates to your having a remote workforce, or it relates to another area that I'm gonna play a clip on, so definitely stay tuned while I play these clips. Now, the first one is really about if you are looking to expand the reach of your business. So let's say you're looking to sell your products online. What a lot of businesses don't realize is there is actually a tax implication to moving to selling your products online. And if you don't get this right, you could put yourself at risk of seeing penalties or having some surprise bills that you weren't expecting. So if you're looking to put your products online, or you're looking to add a delivery service or allow people to buy your products from a distance, make sure you pay attention to the things that I talk about in this clip. Actually, you know what? Before I hit play on that clip, grab a pen and a piece of paper and make sure you take some notes. And you know what? Just go back and re-listen to it. So enjoy the clip. Now, if you're a business coach or you sell some type of training or e-products, there is a tax topic that you need to be aware of, because if you don't understand it, you probably could find yourself into some tax trouble. Now, the topic you need to be aware of, it is called Nexus. Now, I know, Nexus sounds like some crazy, evil computer program from the movie Terminator. And to be honest with you, I'm not sure exactly how they got the name, but it is a true and real tax topic that you need to be aware of. Now, before we dive into what Nexus is, let me just kind of give you an overview of how taxes work. In the U.S., taxes are created at the federal level, which are like the president of the United States, the Congress, the people in Washington, D.C. And then tax law is also created at the state level. So that would be like your governor, your state attorney general level, your state politicians. And then taxes can also be created at the local county level. So you have these three different levels of taxation. Where Nexus becomes a very big topic is at the state level, because there are some laws that went into place a few years ago that allowed each individual state to set rules around when a business or a contractor or a business coach is responsible for collecting sales tax or paying income tax in their state, even if you don't live in that state. Now, for example, let's say you're a business coach and you coach clients via the internet, where you're doing business coaching with them, and you live in the state of Texas, but your clients are actually everywhere throughout the country. Well, if you're not mindful of the rules and you're not aware of what's going on, you very well could be responsible for paying taxes or some form of taxes in all of the states where you do business. So it is very important for you to understand this concept. Now, what makes this a little complicated is that when it comes down to Nexus, states are allowed to make their own rules. Now, a lot of states have similar rules or somewhat similar rules, but the rules can be very unique. For example, there are some states that say if you sell more than $100,000 worth of services or products in our state, or you have more than 200 transactions, then a Nexus event is triggered. And then there are some other states that say, well, you'd have to sell more than $500,000 to trigger a Nexus event. And then there are some states like Florida who they haven't quite finished what their rules are. They have some proposed ideas, but they're still working that out. Now, because each state has the right to set their own rules, it's best for you to work with a tax accountant that helps you understand, hey, what is your situation and what is your business and what's your exposure? Because you may be thinking like, all right, Terrell, does this really matter to me? You know what? My sales are not, I don't sell more than $20,000 worth of stuff in any state. And I would say, based on the dollar amount, you may not have a concern. But in some states, it's based on the number of transactions, which means you might actually have a concern. For example, let's say if you sell an ebook and you sell your ebook for, $3. And let's say if you sell, 200 ebooks in a state. Well, dollar-wise, that's only, $600 in sales? But because you have sold more than 200 copies of that ebook in that particular state, you have now triggered a Nexus event in some states based on their rules. So, although you may be like, I don't sell more than $100,000 worth of stuff, you may still trigger a Nexus event because you sell the quantity that meets the rule for that state. So, this is a very complicated topic, and it'll probably take us maybe 3 hours to go through every single detail of it. So let me give you a helpful hint. What can you actually do about this? The first thing I recommend is that you run a sales report that tells you, hey, where have I sold these products? Like, where were the customers located? So run a report that gives you all of your sales by state and by jurisdiction, whatever level of detail you have. So you can see, what do my numbers look like? What was the dollar amount that I sold by state? And what was the number or the quantity that I sold by state? And then the next thing I would say is contact your CPA or your tax accountant and share that data with them to say, hey, here's what my sales data looks like by state. Can you please tell me, do I have a Nexus issue as it relates to sales tax and income tax in any of these states? Because you want to make sure that you have all of your bases covered and that you are not leaving yourself open to penalties. Because let's say you've been selling products in the state and you've triggered a Nexus event. And let's say, you've sold, let's say, $30,000 worth of products in that state. Well, if that state says that you are responsible for collecting sales tax on all of the items that you sold, then what the state is going to come back and say is, well, our sales tax rate is X% times your $30,000. That's how much money you owe us. And if you did not properly plan for that, that could be a pretty big bill that you didn't expect to pay. So you want to make sure that you understand this as it relates to your coaching and your consulting and your training business. So there you have it. The topic of Nexus is a very, very big one. If you think back, well, for those that don't realize, Nexus is something that dates back that, a lot of states were having a lot of issues about this. And the rules are constantly, I would say, they're evolving. I wouldn't say they're changing, they're evolving, because some of the rules, they're in a very early infant stage, as I talked about in that video. So you want to make sure that you are aware of this and that you have some really good resources. And, one of the resources that I've kind of had a conversation with is a company called Avalara. Now, Avalara doesn't pay me, so I'm not saying this so you guys can go buy it or sign up for them for service so I get some kind of referral fee. It's just, I like the way that they approached it, just from offering like the free advice and the free topics, the free blog posts to keep you up to date on the latest and greatest that are going on in this area. So if you're looking for a solution that will help you start to understand, hey, what's going on? Does this impact my business? They have a free service, a free blog, a free articles that they share, and it does a really good job of providing you with some context. Now, the next topic that I think is a very, very important one, because a lot of businesses are considering, do we go back into the office or do we stay remote? If we stay remote, how long do we stay remote? Well, if you're going to have a remote workforce, what a lot of people don't realize is it could really change your tax situation from a payroll employment tax. And you really need to be aware of that, because if you're a small business and you have your workforce is working remotely, unfortunately, a lot of people or their accountants didn't let them know or didn't give them a heads up. So they're actually seeing some surprise tax bills, or they're getting surprise notifications from different states or different jurisdictions. So I tell people, pay attention to what I talk about in this clip. And what you can do is, I'm going to tell you a couple of things that you can jot down, and once you finish hearing it, you can actually just send your tax preparer or your CPA or your tax accountant, send them an email and say, hey, are we good on these topics that Terrell talked about? So, as we live in a world where there are so many more companies that are having a remote workforce, there is probably a new tax consideration that you have to keep in mind as a business. Now, if you are not prepared for this, you could find yourself getting a surprise tax bill, which is never a good experience. I mean, as a CPA who works with different clients, I can say getting a surprise tax bill is never a pleasant experience. So, what is the consideration that you need to be aware of? And that is employee withholding taxes. And I guess you would say it's the topic of Nexus. Again, as I've said in several other videos, Nexus sounds like an evil computer program from the movie Terminator, but it really is a topic related to taxes. Now, if we take a step back and we think, the way taxes work here in the US, there are rules that are made at the federal level, there are rules that are made at the state level, and then there are rules that are made at the local and the county level. Where Nexus becomes a very big thing is at the state level. Now, what Nexus allows is it allows states to set their own rules around what triggers a tax event, or what can make a company or a person responsible for paying taxes in that state, whether that be sales and use taxes, income taxes, or whether you're responsible for withholding employee taxes or employer taxes. Now, when it comes down to thinking about your remote workforce, when all of the work was being done in the office and the employees had to actually travel into your office, where your office was located really determined, hey, where the taxes were being paid. Now, if you live in a place where you are close to, let's say, the state line, or you're close to a border, or you have employees who work remotely from a different location, that may actually trigger a different type of tax event. There may be tax implications where your company is responsible for withholding taxes in another state other than the state where you actually have your business headquartered or you have your operations located. So you want to make sure that you think about those things. And as many of the companies are during the pandemic are now having employees work remotely, many companies probably didn't think about that, but that is something to consider, because there are situations where a state can come back to you and say, well, this employee has been working from home and their home is actually located in our state. Although your business is not in our state, your employee is working from our state, which means part of your business is operating in our state, which is an important factor to consider because that state could come back and say, hey, you have a tax liability in our state. So you want to make sure you understand some of those aspects. Now, another very, very critical area where this comes into play is your T&E, or your travel and entertainment. There are a lot of companies that have employees that travel to different places. So you want to make sure that you understand, you know what, is there a tax event related to the travel that my employees are doing? Let's say, for example, your business is located in, let's say, New York City, and your employees or your sales team, they're traveling to, Dallas, Texas, they're traveling to, Oakland, California, they're traveling to Portland, Oregon to visit clients or to do, I guess you say, product installations. Well, as they're doing that traveling and they're going to those different places, because of rules related to Nexus, those states may have rules in place that say, for the work that your employee did when they were in our state, then your company is responsible for withholding certain taxes to be paid in our state because your employee was actually operating your business in our state. So if you're running a business, and especially if you're a startup business where you may not have your own internal tax department, it is very, very important for you to have that conversation with your accountant or the tax firm that you're working with to understand, are there other tax events related to the type of travel that my employees are doing? And one of the ways that you can approach this is when your employees submit they submit a travel receipt for reimbursement, have them list out, hey, what state was the actual travel to, or what state was the expense happening in? What was the purpose of the trip? And by having that information, you can then run T&E or travel and entertainment reports to see what were all of my expenses by state. You can see how long that trip lasted, how long was that employee in that state, and then you can take that information and go to your CPA or your tax accountant or your accounting firm that supports your business and say, hey, here is the T&E for all of my employees that were traveling for business purposes by jurisdiction. Now, please tell me, do we have a tax event or a tax consideration that we have to consider because we have employees traveling to all of these different places? And then your CPA or your accountant or the tax firm that supports your business should be able to give you an answer and help you understand if you have a specific tax event because of that business-related travel. Now, the last clip that I want to go back. Now, this is one where I've heard a lot of people talk about this as a quote-unquote tax strategy. And I say, don't do that. Please don't. I mean, because it's not a good idea to get this wrong. In fact, you know what? I was talking with a lawyer out of New York, and her and I were talking, and she was saying that, a lot of her business is helping people get out of the trouble that they got themselves into because they applied this quote unquote tax strategy wrong. And she was saying that, some of the people that she's trying to help get out of it, they're like $60,000 in penalties because they did this wrong. So I was like, you know what? I need to create a video to talk about this because I hear far too many business owners talking about doing this. And I'm like, you know what? That's not a tax strategy. There are actually rules related to that. And if you do them wrong, you could be setting yourselves up for a world of hurt and a lot of money in penalties. So enjoy this last clip and then I'll be back. Now, there is a very dangerous piece of tax advice that I hear a lot of people giving business owners, and it is related to whether you're an employee or a contractor. Now, the tax advice that I hear a lot of people talk about is, hey, Instead of hiring employees, maybe you should just hire contractors because you don't have to pay the employer portion of employment taxes. And I say, that part is true, but if you don't actually understand the rule, you could be setting yourself up for some huge penalties, and in theory, that's actually tax evasion if you do it wrong. So I always advise any business owner, if you are going to hire people as contractors instead of employees, we need to make sure we understand the rule so you don't do it wrong. Now, one way to think about that is, a person that you hire to work in your business will be considered an employee for tax purposes unless the nature of their work is actually controlled by them, which means that person actually has a right to say yes or no to a deal. For example, if in my business I choose to hire a photographer, if the photographer has a right to say, yes, I'll take photos of that engagement on that day, or no, I won't, like the photographer has full control over their calendar and what they do and don't do, then that is an example of that's a person that's a contractor, not an employee. Another aspect about it is when it comes down to the finances. Now, the question you would ask is that person responsible for the financial expenses of running, whatever business it is? Again, let's look at another situation. As an accountant, if you hire me to consult your business or to do financial consulting or to work with your taxes, as you are hiring me, your business is not responsible for buying my laptop. It's not responsible for, buying my clothing or buying my supplies. My firm is responsible for paying for all of that, which means, hey, it helps you understand that I am not an employee of your business. I am a contractor of your business. Another very important area would be the terms of the agreement. Now, when you hire an employee, typically the employee signs an employee contract or an employee-employer contract. And that contract has some language in it. But when you hire a contractor, what typically happens is the expectations of what you want from that contractor or from that business is actually spelled out. And what you are hiring them for are very specific things. For example, let's say you're hiring a graphics designer and you lay out in the contract, hey, these are the things that I need you to do as a graphic designer for my business. Once you complete these things, our arrangement or our agreement actually ends, which tells me that the terms of that contract are specific to the task that you have asked them for. And once they complete that, the contract actually ends. Whereas when it comes to an employee, when you hire an employee, it is, hey, you're hired to do this job description. And then they usually say something like, and you report to this manager and other things that this manager asks of you, or the terms are a little bit more vague and a little bit more general, which is a very clear sign to the IRS that, hey, this person is not a contractor. This person is an employee. Now, again, the tax strategy that a lot of people are trying to employ is, well, if I hire you as a contractor, I don't have to pay as much in employer taxes because you're a contractor, and contractors are responsible for paying their own taxes, not the company. But if I hire you as an employee, as a company, you are responsible for paying a portion of the FICA, the Social Security taxes, and that is a cost to your business. So you want to make sure, if you are hiring people as contractors to reduce your tax liability, you want to make sure you talk with the CPA, your tax attorney, or your accountant to understand, are you actually applying the rule properly? Because if you're not applying the rules properly, it's actually tax evasion, and there could be very serious penalties or punishments involved for misapplying this rule. Oh, there you have it. Some quick things that you need to know, because as we're in this world, as we're navigating how our businesses are going to operate, I mean, we're looking at online sales. I mean, we're selling across state lines. We're selling around the world. I mean, our people are working from different places. They're working from home, or they're working while they're on vacation. They're moving around. I mean, there are so many different things to consider and so many different things to think about. And then also that strategy that a lot of people, well, they think it's a strategy of, oh, I'll just hire contractors instead of employees. Like, that's not really a tax strategy, because actually, there are rules around that, and you need to make sure that you are compliant and you are operating within the bounds of the rules. Because when you get out of bounds on that, there are some penalties there. So definitely take notes on all of these topics that we talked about. And what you can also do is, if you know a business owner, make sure you send them this episode, because they need to know it, because a lot of business owners are trying to navigate these different decisions and they need to know these topics. And what you can also do is go over to YouTube, go over to Apple Podcasts, go over to Stitcher, Spotify, SoundCloud, wherever you listen to podcasts. Click that subscribe button on the Finance and Accounting Show and turn the notification bell on so you'll get updates on when we are releasing new great episodes and topics. And as I said, listen to these over and over until you get it, because you may not be the expert, but the IRS still holds you responsible for being aware of these topics and how it relates to your business.